This is Carl with your Kansas livestock update for the week. Some of the top trade stories we had here started out. A new story came out of China to start the week, not too surprising, saying that their pork demand has likely peaked. Basically saying that they've streamlined their own domestic production, going to have more efficient hogs. They're producing better, leaner pork, you name it. It goes on and on. One of the big factors is a simple declining population in China, which is going to lead to less food demand on a whole. The fact that China has introduced more beef to its diet will also impact their demand a little bit there moving forward. Speaking of demand, we had our export sales this week came in mixed. Beef sales for the week down 15%, 18,200 metric tons for the week. Pork sales jumped 32% on the week, though, coming in 32,200 metric tons. So a little bit of a mixed week there on the pork sales, basically picking up a little bit more business going into Mexico. I think a lot of Mexican purchases taking place ahead of the tariffs that will be going on next week, and we'll talk about that in a minute. One thing that has changed when we started out the week was when we got the commitment of traders report to start out. We've seen big losses in the feeder cattle contracts, both futures and cash, but mostly futures. We've seen a big correction there, correction in cattle on a whole. Here's the thing, we got the commitment of traders report, and even though we have seen prices, some pretty hefty losses, funds reestablished the record long. Matter of fact, added to it long 30,000 feeder contracts right now. So that surprised us a little bit that we saw that with the market action we've had. So funds snuck that one in. Thing is, we'll see if they continue to build to it now. We did see some price pressure to finish the week on tariff concerns, and I'll get to that again in a minute here. Midweek, we had the cold storage report came out. U.S. beef inventory was up 2%, and this was as of January 31st, 2% from December, 463.28 million pounds. Pork reserves and freezers were up 3%, 410.23 million pounds, and pork bellies jumping 24% to 42.28 million pounds. Basically, those were seasonal gains. You do tend to see a bit of a build in red meat reserves. We're down from last year. We knew that going into it. Continue to see elevated beef production coming from heavier animals. We got the end of the week slaughter run came in. Beef production, pork production, pretty much steady from a week ago. Only fractional changes on each one. The number that continues to jump out though, live cattle averaging for the week 1,440 pounds, 49 pounds heavier than a year ago, starting to add more and more beef to the U.S. supply, even with the lower cattle numbers. And to that, we also had the Ag Outlook conference this week, coming out saying that the U.S. beef production for 2025 will likely decline 2% from 2024 to 26.6 billion pounds. U.S. pork production for 2025 expected to increase 3%, coming in at 28.5 billion pounds. Carcass weights, the USDA continues to run a lighter carcass weight than what we're seeing. They're using about an 830 pound carcass. We've been averaging almost 100 pounds heavier than that per week, every week of this calendar year. So we did see an adjustment upwards in beef production in the February balance sheets. A couple weeks here, we'll get the March ones. We'll see if another increase has been made. One of the final thoughts for the week is on tariffs. We've heard about tariffs all week. We've heard about tariffs longer than any of us want to. Trust me. The latest word as of this recording. Now we have seen this back and forth, but as of right now, The latest statement we have is tariffs will go into effect 25% Canada, 25% Mexico next Tuesday. Here's the concern. Yes, it's probably going to impact our commodity demand. It's probably going to impact our pork demand. Canada is 8% of U.S. pork consumption. Mexico 32%. So 40% of our pork consumption is now going to have a tax of 25% put on it. On cattle, the question is what's going to happen with feeder cattle out of Mexico. We get a lot of feeders out of there, about 100,000 head a year. 100,000 head a month. We also get a pretty steady flow of feeder cattle coming down out of Canada. Looks like we're going to be adding to those as well. So, what will these rates do moving forward? I think they're going to have some impacts on our livestock, and we've overlooked that a little bit, I believe, in the market. We've been heavily focused on what it's going to do to corn, soybeans, wheat, ethanol, you name it, fertilizers on the inputs, but it is going to be a factor on our red meat exports too. To what extent, I cannot tell you. I can't tell you that. Even if it's just a knee-jerk reaction, we're going to see a reaction. In the last week's export sales, the week ago ones, we did see heavy washouts on 2026 pork purchases from the top three trade partners there, Canada, Mexico, and China, washed out of a combined just short of 13,000 metric tons of pork. So to see a little bit more would not surprise me. Those are some of the top stories we had in livestock this week. Thank you for your time.